There I go live on YouTube, and I'm gonna go live on LinkedIn in a second. In a second, I'll be live on LinkedIn, and then we will begin the show that we deserve, right? I am here. Just let me put myself on LinkedIn as well. Episode 179. Stream details updated. Live on LinkedIn. Perfect. Let me share this link with people on WhatsApp, and then we will be good to go. We will be good to go. Oh, a lot of people. And I'm audible, I'm live. So let's begin. Let us begin the show that we deserve. Right? Anyway, my throat is down, of course. Delhi's pollution, I guess. So I sound like Batman. Or a frog. Whatever you can choose. Alright. I am audible, so let's begin. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Man, it's not getting better. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. A lot of other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. Oh, but before we go, we gotta follow this tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Nice. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a beautiful thing to say. With that out of the way, yeah, I do sound like Batman today, right? It's not what I am underneath. No, yeah, it's not what I am underneath. It's what I do that defines me. Thanks to Delhi's pollution, man. A lot of words by Supreme Court. Man, Supreme Court. Does anybody respect Supreme Court anymore in this country? It's just very, very weird, right? Anyway, folks, good news coming in for the Indian markets. Indian markets did very well, right? New peak after 14 months, 26,216. Pretty good day for the stocks. A lot of gains, right? Especially in the finance, capital, defense, and so on and so forth. Pretty good show. This is obviously in response to whatever is happening with the U.S. rate cut, quantitative easing, if you can call it that. That's leading to good expectations when it comes to stock markets, right? For now, all the concerns about Nvidia and the shots against Nvidia and all, the story is intact. It is very murky. All the details are very murky, and the linchpin, as as Dr. Burry said, is OpenAI, and people are saying that OpenAI will not be able to generate the revenues enough for it to make all those commitments, and even forgot about commitments. It needs $500 billion till 2030 to keep running. So that's since it's a private company, you don't know. So that's what's going on with the global markets to avert all those risks. Uh, Looking at the inflation data, looking at the job data in US, which doesn't exist, right? They couldn't get the data for October, but they are essentially moving on with the rate cut most likely, and and also the U.S. India trade deal, right? That's also on cards. So all these factors are leading to real good news when it comes to the Indian markets. This news is pretty much in line with the predictions that we made like quarters ago, right? We told you that the banking thing with the finance thing will turn around in this particular quarter, in the last quarter, right? The whole net interest margins concerns will wade away. And that's exactly what happened. So good for us predictions, good for our predictions. And that's what's happening with the markets. Speaking of markets, there is a serious war happening when it comes to the quick commerce play. There's Eternal, which has about 50% of market share of the total quick commerce. And then there's everybody else, right? There's Swiggy, there's Zepto, there's Big Basket, there's Amazon, there's Flipkart, and so on. Now, Eternal has about 18,000 crores in cash. So it has a really, really solid balance sheet. 18,000 crores is about $2 billion, right? That has to be a very, very solid balance sheet. Swiggy has about 4,000 crores right now, but it's raising 10,000 crores via QIP, the qualified institutional placement. And then it's also getting 2,000 crores from the sellout of its stake in Rapido. So 4,000 crores, 2,000 crores, 10,000 crores. After everything, Swiggy will be looking at a balance sheet of 16,000 crores. Zepto has about 7,000 crores, right? And Zepto is looking at going public next year. So a lot of fundraise activity happening, right? Nobody's making money. If you look at the quarterly burn of these companies, it's astounding. They're losing about 500 to 800 crores a quarter. So they're basically losing about 200 to 300 crores every month, right? So if a quarter is considered 1,000 crores easily each company. Now, Blinkit says, Eternal says that it doesn't mind it because it has so much of cash, and it doesn't need to focus on profitability just as yet because, there is cash. And even though its burn is the lowest, uh, it says it doesn't need to start making money. It doesn't need to think about contribution margins right now. CM2, it's called. But Swiggy and Zepto are, of course, going to focus there. Swiggy more so because it's a public company. Institutional investors are essentially getting scared about Swiggy's position in the market, which is exactly what we told you, right? Swiggy is in trouble. So there's a lot of war of words going on between Zepto and Swiggy. Zepto says we've crushed them. Swiggy says that's false, and so on and so forth. Why are they doing that? Because that narrative, that story, is going to be the deciding factor of where the institutional money goes. Because institutional money is not going to go with both of them or all of them, because there's finite institutional appetite for quick commerce play considering its profitability profile. So that's what's happening with quick commerce, right? A lot of action. Big basket is, of course, nowhere to be seen. Amazon, Flipkart, and so on and so forth. So these people are just burning money, right? I had written now Zepto's founder, Aditya Palicha, I guess, he had said that we will be profitable in the mid of 2025, something like that he had said, and very very openly. So it's not, I'm not making this up. And I had done an analysis of the burn of Zepto, of its profitability profile, of its average order value, which rests at about 543 rupees, right? At that time, it was about 450 rupees. And I had said, considering what it's spending on delivery and everything, it'll be wildly unprofitable even at a revenue stage of 10,000 crores, which is exactly what turned out to be. These people are wildly unprofitable, even at 10,000 crores. Now, sky's the limit, of course, till when the money rides, right? This thing will keep on. As soon as somebody gets money, as soon as these people get money, discounts will be on. And as those discounts happen, right, the average retailers will be driven out of the market, which has been my primary concern with this business model since the beginning. So my analysis on Zepto was extremely viral, right? I was provocative intentionally, but I had said that's a piece of shit business model, and you can't undo the past. I can't delete the article. So this is what I said. I said it's the intersection of everything bad, bad operations, bad margins, and bad macro. So bad macro because people don't have the buying power to actually sustain a business model like this. Bad margins because what you're seeing right now, and bad operations because it's extremely heavy, ops heavy, and those ops will lead to more and more problems as we go. So that problem keeps compounding. It doesn't get easier, by the way. So if you have 1,000 dark stores, or if you have 5,000 dark stores, it doesn't get easier, right? The struggles keep multiplying. So right now, when they're evaluating their profitability on contribution margins, they're not even pretending to be profitable at the net level, but most of their costs rest at net level. So it's a financial jugglery, right? What they do is they keep all their costs at the net, and then they show adjusted EBITDA, where they show that contribution margins and this and that. So it's just financial trickery which is happening. Uh, while that financial trickery happens, I don't mind financial trickery. It's okay. It's fine. The average retailer gets hurt. This is my biggest issue with quick commerce, has always been. And as that happens, nobody's coming to save those guys, right? Saving all these businesses and saving the the average retailers at once just requires one single move. Okay, it just requires one single move. One single move is that you just disallow capital dumping based discounting. Essentially, negative gross margins are disallowed. So if you make it a mandate, that's where Competition Council of India comes in, because the average retailer cannot discount the products, right? He sits on a simple, transparent, thin margin, and he sells at that margin, and that's his business line. What these people are doing is they are adding delivery cost to it, and even then they are selling it cheaper, not because their procurement costs are better. That's a hogwash, right? It's because they're burning money when they do that, and as they burn money, right, they are going to hurt the retailers. So to make their business healthy, and also to save the average retailer, all the government or the Competition Council of India needs to do is step in and say that, hey, we don't allow this. You've got to sell at positive gross margins, right? And you've got to do that. And this has to, now this is obviously against the principles of ease of doing business. This is regulatory overload. This is compliance hassle. This is, of course, interfering with the free market, so to speak. But this is necessary. This kind of thing keeps happening because when a retailer dies, it's not just the retailer dies; its family, becomes unemployed and so on and so forth. The distributors also stop making money, and then the distributors stop dying. So the general trade essentially gets killed, and it's already happening. So that is a very, very big concern, which should be addressed, but it's not getting addressed because if the government steps in and does something like that, it's going to be against the principles of being investment friendly, even though it's going to be good for the profitability profile of the company because now they'll be mandated by law to not sell at negative gross margins, right? So that'll be healthy for them. They'll stop burning money. They can see what happens, right? See who buys your service at the fair price. That is the market. Why are you destroying the market with all these artificial discounts and so on and so forth? It's bizarre, right? But they have to, because the market itself is very, very small about of this, and they're extrapolating that small market and projecting a very, very big business out of it, which was my complaint in the beginning as well. So I had written that about 2 years ago, I guess. Nothing has changed. It's still on, right? So there is a comment by Mr. Abhishek Sharma. In its current form, the quick commerce business is not sustainable. Maybe it can exist in select pockets by charging high platform or the fees. Correcto. Correcto. So that's what's happening, folks. The second prize. The second prize. Moving on, folks. Speaking of very interesting happenings, Mr. Byju, again, news fatigue, but it's important. He's talking about how he has not round tripped $1 billion, $500 million when it comes to Byju's investment, right? People are claiming, the investors are claiming that this guy essentially siphoned off the money. He round tripped. He says it was all for companies' investments, and that case is going on. Oh, Byju's. Oh, Byju's. But you know what the good thing Byju did in the process? It ran a very good Mahatma Gandhi Amir Kalyan Yojana. While it was building its bubble, it ended up giving very, very good acquisition offers to many, many businesses. So it acquired so many companies, right? It acquired Toppr, it acquired White Hat Junior, it acquired Akash, it acquired so many companies, some US based companies as well. There's a whole list of companies which it acquired, right, for billions of dollars. Now, all of those companies were acquired on cash. So, those people, they were building those companies, they were struggling while building those companies. Like Toppr was not exactly a greenfield, right? It was a struggling operation. They got cash and they got out. Talk about luck, man. Talk about luck, right? So we were building this company. Toppr was a very old company. Mr. Zishan, he was building this company. So it was running for quite a while. It was not doing as well. It would have been very, very difficult for Toppr to just return its investor money. Forget about giving a multiple, right? Just return it. It would have been impossible. But somehow, Toppr got a very good acquisition by Byju's, right? So Byju's should be heralded as like a new age Robin Hood. So what he did was he took money from Mr. Byju. He took money from the richest of the rich, right? He took money from Zuckerberg Chan Initiative. He took money from all of these Sofina and US based guys, and then distributed to the struggling startups, gave them very very healthy cash outputs, and then just died. So Byju's, in my Batman voice, was the hero we needed but we didn't deserve, right? And now we are chastising Mr. Byju for siphoning off money. That was for public service, man. Come on, come on. Man, it's very difficult talking in this voice. Are you being able to listen to me? Am I audible? Is this tolerable? I mean, I'm surprised that you guys are still here, right? Is it tolerable, guys? Can you hear me? Man, man. Anyway, there's something really interesting happening. It's called D2M. D2M, do you know about D2M? D2M is direct to mobile. So, what D2M wants to accomplish is TV on mobile. TV on mobile. That's a very interesting technology without connection, without anything. The spectrum essentially allows phones to receive the TV signals, so you can get live entertainment. For now, Prasar Bharati and so on and so forth. They're coming out with very cheap phones, the touchtone phones, and those touchtone phones are essentially allowing them, to receive TV signals. Now, this is TV shot at being relevant in the mobile age, because mobile essentially killed TV, right? But TV could survive, or at least the format, the linear TV format could survive if it was accessible on mobile. Now, this is something very, very interesting. The Sankhya Labs, it's a Tata owned group. Sankhya Labs is the one pioneering this D2M in India. So for now, it's the touchtone phones, the cheap touchtone phones, and then it can be a USB play, right? Where they get a small dongle of 500 to 600 bucks, and then they could get TV without any, uh, you know, connections whatsoever. So this is extraordinary. This is going to be huge. Telcos are obviously against it. Why are telcos against it? Because it's going to cut uh, their data revenues, right? The data revenues get screwed, telcos get screwed. They don't want that, because this is obviously going to drive people away from the big tech driven operation, right? The whole YouTubes of the world. Let's see how this can play out. The government has shown its keenness towards taking this operation forward, but let's see what happens when it comes to actual implementation of it. Mr. Parag Naik sir, from Sankhya Labs, actually reached out to me while I was building Seneca, the distraction-free smartphone, and we had a very nice chat. And he was a very, very kind, hospitable, congenial person. So I'm very happy for him. So that's what's happening with D2M. It's gonna be an interesting paradigm shift. Do you think when TV comes on mobile, it'll actually divert people away from YouTube, from all of these places? I think yes, because there is still some unreliability when it comes to signal, right? With the TV thing, it will exist. The same problem will exist, but to a lower degree. So 24/7 TV, even on mobile. How does it sound? Right? Amazing, amazing. India is opening. Can you hear me, guys? You're not saying anything. Can you actually listen to me? Is it tolerable? Because to me, my voice sounds very, very weird right now. Right? Is it actually, tolerable for you? It's very surprising. Audible, says Mr. William Davis. Mr. Abhishek Sharma says, but the question is, even if it's available on mobile, who will watch? Tolerable, says Mr. William Davis. All right. Why is it very profitable? Man, where are these crypto bots coming from? Unbelievable. They're just like, yes, you are audible, although your sound is low as compared to usual days, says Mr. Abhishek Sharma. All right, let's move forward. India is essentially looking at privatization in the nuclear play. This is an evolving story. We've talked about this. We have talked about how India wants to be a nuclear superpower because it's very, very important for India to have that kind of control on the nuclear play. Uh, Contrastingly, the globally, if you look at the global trend of nuclear power, America has a lot of nuclear power which is privatized. Okay, so there's a lot of private that participation in the nuclear play. China is 100% state owned. Okay, uh, but US has about 30% of nuclear share of the world. China has about 16%. Then comes France. It also is totally privatized. Public nationalized. It is at about 4-7%, I guess. And then comes India and so on and so forth. Everybody else. So US and China are going very heavy on the nuclear power plant way. I'm just trying to find out that particular exact figure. Although I've told you the figure pretty clearly, but still. So India's privatization is very, very interesting when it comes to this particular paradigm, right? So it is a move which should be welcomed with all good graces, and it is. So it's just brilliant. Let's see how the privatization play happens. If you remember, uh, the whole nuclear journey, they are looking at a lot of ways to feed it. So the way to feed it is, first of all, using the facilities of old power plants, not nuclear, of course, but which are coming end of life. So what are the two biggest troubles with India whenever you're trying to set up a manufacturing operation or anything? What are the two biggest troubles with India? Can you guess, folks? Again, the question is, what are the two biggest troubles with India when you're setting up anything on the ground? Can you guess, folks? It's an easy question. We've talked about this. Babus, says Mr. William Davis. Yes, yes. But the way Babus do it is by land and labor and LNL, right? So land and labor are the two biggest problems. So the clever way in which the government tried to circumvent this issue was using the existing facilities which are getting retired. So a lot of space and nuclear frontier stuff happening, which is very, very important. Let's move on, folks. Supreme Court has raised an alarm over air pollution, by the way. This is very important, right? Very important to raise an alarm. Raising an alarm was what we were looking for. Man, these people. God damn it. My voice, my beautiful voice. मेरी आवाज़ ही तो मेरी पहचान थी. Anyway, Whirlpool has offloaded 11.2% stake in the Indian unit through bulk deals. Whirlpool was trying to sell itself, the Indian unit. Reliance, Havells were in the fray. Then private equity players came in. Then only one private equity player was remaining, right? Now, that transaction will happen in the middle of 2026. But the 11.2% stake sale is going to fetch them some money, which is going to be used for Whirlpool parents' debt pairing. So when it comes to this particular industry, Whirlpool has fallen to the fourth place, right? Number one is Samsung, number two is LG, number three is Haier, and number four is Whirlpool. Which is fourth place is a very sad place, you know. Fourth place is usually the consolation prize when it comes to products like these. So they're desperate. The US group is desperate to pay its debt for it. It needs to sell, right? So if you look at After sale, parent company will own less than 40% and sold at 1,000 crores. So Whirlpool is getting valued at 1,000 crores. If you look at the revenue numbers, right, there are the revenue numbers. Uh, Let me just fetch them for you. Where are the revenue numbers? Just one second, folks. I am missing the revenue numbers. I read them. I read them. So okay, yeah, it's in a different play. So if you look at Whirlpool revenues, they booked 7,420 crores of revenue, 24 25. LG did did revenue 24,000 crores, of course. Samsung did not disclose its television business, from the television business and so on and so forth, but it did some 11,000 crores. So the Whirlpool play is at 7,400 crores. So at sales of 7,400 crores, it's getting valued at about 10,000 crores, which is a revenue multiple of 1.2, which is the price it's paying for being at the fourth place, right? By the way, Hire at the same time is looking at investing about 1,000 crores in the country. Parent company said to be looking at infusing funds to set up its third factory. So this is a private capex news, which is great news. 1,000 crores, third factory. It's also trying to sell some stake to Bharti uh, Mittals, right? No relation to me, of course. 49%, 49% Bharti, 49% Hire, and 2% for employees. So that is what Hire is trying to do. Hire is doing really well. It's a Chinese company, unfortunately. So that's what it is doing. So if you look at, yeah, Hire India overtook Whirlpool India in sales, thereby becoming the third largest consumer electronics company. So that's where Hire is right now. LG and Samsung are number one, number two. So that's what's happening with the consumer electronics, consumer heavy electronics play, right? Durable, consumer durables. Uh, there is a generic HIV drug which was supposed to be rolled out. So these people were hoping that there'll not be phase 3 clinical trials in India and it can be rolled out without that. But they've gotten a setback, right? India rejects clinical trial waiver, blocks fast track route for Lenacapavir. So the drug is called Lenacapavir, and it's gonna go with phase 3 trials, as is intended, always, as is the standard. So that's what's happening with the generic drug, right? There's a lot of money going into reality, of course. Hero Realty is looking at Hero Realty and HDFC Cap developing housing projects, right? Thousands of crores. Tata Realty has raised 1,200 crores, 1,280 crores in green loans, and so on and so forth. So a lot of action happening. Hero Realty is, of course, the part of Hero Corporate, Hero Enterprises. It's not Motorcorp. Motorcorp is Mr. Pavan Munjal. Hero Enterprises is Mr. Sunil Kant Munjal. Hero Enterprises has Hero Steel, Hero Realty, Hero Insurance, and so on and so forth. So Hero Realty is a part of the different family of Hero, just for your information. Hero Cycles is the OP Munjal group. So this is the whole family tree. A very good book about Hero has been written by SKM Sir, Sunil Kant Munjal. It's called Four Brothers and a Revolution That Shaped the Nation. So very good book. You can read it. Very, very nice book. Moving on, folks. Chinese tourists are coming to India, but doors barely open because a lot of restrictions. So they're saying that 3 lakh people from China essentially were tourists in 2019, and that's when the war happened and everything stopped. And that could gain traction if something good happens. However, there are current upper limits placed by Indian government for the visa thing, and that is slowing it down. Now, ideally, slowing down Chinese is not a bad idea for India. However, when it comes to tourism, we are already getting very few people, right, in India. The foreign tourists are at an all-time low. Hampi, which is a very beautiful ancient heritage site, uh, its visitors have plummeted by about 80% in just a year, right? So India is not being able to attract foreign tourists. So that's what's happening with China. They're asking for more waivers, essentially. Should India give waivers to China, even if it's for tourism? Do you think that's a good idea? What do you think about that? Right? Because you know the MSS, right? MSS is the largest intelligence agency of the world. Everybody knows about CIA. Nobody knows about MSS. MSS is huge, right? It has budget which is twice that of CIA, at least in PPP terms, 17 and a half. No, actually, it's not just PPP terms. It's higher than US in absolute terms. $20 billion. CIA has $17.5 billion. So a lot of serious action by Chinese intelligence agencies. Let's see how tourism or what tourism has to do with it. Moving on, folks. Economy entering the second half of the year on firm footing because of rising consumption, GST cuts, and so on and so forth. Well, we've talked about that a lot. We've talked a lot about that. Let's move forward, folks. Relief for employers, new labor codes slash jail provisions to 22. Labor codes are, of course, a big news. This is land and labor. This is what I told you, right? These are the two biggest problems. Now, decriminalization of labor play is very important for people who are trying to hire people, right? There are a lot of arbitrary ways in which a person can be jailed, even if he's giving jobs on the ground, right? Some of those things were obsolete, of course. So that's what's happening, right? Sections attracting imprisonment down from 87 to 22. Out of this, 16 offenses, compoundable improvement notice to be given. Only 6 offenses related to safety and security to attract imprisonment. So, land and labor reforms, those are the two greatest impediments to the India growth story. Let's see. Speaking of India growth story, folks, Railways is looking at non-fare revenues to rise. Non-fare revenues is, of course, leases, selling of waste material, collecting all the residual material which is transported but which is left. So let's say if you're shipping cement or something, so you collect it all and then sell. Most of these things must be happening in black, but NFR still is about 6% or 3% of the total railways revenue, right? So they want to make it go up, of course. Yeah, Indian Railways makes roughly 3% of the total income from NFR. NFR earnings of the national transport stood at 588 crores. So they want, you remember, this was a developing story where they allowed the Haldirams and the McDonald's of the world to set up their stalls, right? This was premium food outlets allowed to function when it comes to railway, property. That was a step in boosting the non-fare revenue. Currently at 3%. Let's see what happens. Moving on, folks. This must be, oh my god, these crypto spammers, man. What do you do with these crypto spammers? Nobody knows. Nobody knows, right? Anyway, so Awada, there is a company called Awada. I don't know much about it, right? They are planning to invest 1 lakh crore to expand operations. They're an energy play, right? In 5 years. So that's 20,000 crores in 5 years. But they only have a history of raising 10,000 crores as yet. So do you smell some BS when it comes to this commitment? Most of these commitments don't fructify, right? This sounds like one of them. Coincidentally, the person behind Awada is also a Mittal. Chairman Vineet Mittal, right? 1 lakh crore over 5 years to scale generation capacity to 30 gigawatts. Avada, which currently has 6.1 gigawatts operational and nearly 10 gigawatts under construction, intends to add 4 to 5 gigawatts annually at an investment of 20,000 crores. Well, maybe it can raise 20,000 crores annually and lead to an investment of 1 lakh crores. That's Mr. Abhishek Sharma says definitely. Yeah, it does smell a bit weird, right? So that's what's happening. 6.1 gigawatts operational, 10 under construction. So they have like 16 gigawatts right now. They say in the next 5 years they're gonna double. So that sort of sounds plausible, but at the same time, let's see. Let's see. The history seems a bit, employs over 6,000 people, plans to hire 10,000 more. So this looks like a PR piece for me. Moving on, folks. There's a lot of debate about DPDP. That is the Digital Protection Privacy Act. We talked about this. Telcos are not happy. Telcos say that our concerns have not been addressed. There's a lot of overlap with existing things like certain cert dash in certification in. It's also there's a lot of things in place, and what the telcos are being mandated to do, a lot of it is overlapping with the existing steps that they are already making in that direction. So they're not happy. This is a usual news generator, a usual tussle between the telcos and the Department of Telecom. They want them to implement more and more safety features. These people are like, this is going to add a lot to the cost and so on and so forth. They're saying that if we it should be there should be a restriction between for ages below 16 to 18 for us to be implementing all of this. So let's see what happens there. Right, moving on, folks. India taps Morocco ties for fertilizer needs. This is also an ongoing story. If you remember, when China blocked fertilizer supplies to India, where did it go? Where did India go? India went to Russia, India went to Saudi Arabia, and India went to Morocco. Morocco was the very important destination to get those fertilizers, because China, we are very dependent on China when it comes to fertilizers. And if not for Chinese fertilizers, it would have been a huge problem, because this season was coming, right? So now those conversations, while at the time didn't materialize because these things take time, and China essentially allowed the export of fertilizers to India at the right time, in a typical leverage play. Morocco conversations are still on, and they are moving forward. So not just agriculture, Morocco is also being roped in for defense purchases and so on and so forth. So they're trying to make a deal with Morocco. Moving on, folks. You know what's going on with Vinzo? The founders have been arrested. They're basically charged for laundering money. All the Vinzo India operation money has gone to Vinzo US. They claim it's investment. These people claim it's laundering, right? Because US is essentially a shell company. Most of the operations, all the operations, rest in India. So that's what's happening with Vinzo. A lot of firestorm. Get well soon, Nishant. Hats off for your consistency. Thank you, Mr. Sumanth Kumar. That's sweet of you. Hats off to your consistency as well, that you are so regular. I hope you're noticing the change, the growth or whatever, as far as our capacities to know and think are considered. Because you are as regular as I am. You are almost, no, not almost, you're always there. Most of the Thinkers Frequency viewers are extremely regular viewers, and they ask questions and so on and so forth. So we're doing this very much together. So hats off to your consistency as well. But what I sincerely hope is that it's as valuable to you intellectually as it's for me. Social media metrics be damned. Moving on, folks. It is great. Vedanta is looking at raising debt again, right? 2,000 crores via the metal arm. Vedanta is going undergoing a very big demerger play, right? So its debt troubles are huge, but it's somehow been able to address that, the dividends and so on and so forth, and the demerger play looks okay. 2000 crores being raised via debt. Speaking of debt, a lot of companies are opting for long debt and easing cycle draws to a close because they believe that you know, if they raise debt and a long term debt, it's the best time to raise debt because as the rates go down, this is the bottom of that cycle, right? So a lot of companies are lining up to essentially raise debt in a long term debt fashion. So I'll tell you exactly what they're saying. So they say market participants say companies want to secure funds now before rates stabilize while also meeting regulatory and investment requirements towards fiscal year. So that's what borrowing costs are near their lows, making this the most opportune time to issue longer tenure bonds. Because as the rate cuts happen, the bond prices will go up, right? This is the best time to do that. So that's what they're talking about. Moving on, folks. Mr. Ashutosh Bhandekar. Get well soon. I need to use headphones today. Our energy. We are missing the high energy and Nishant humor. My voice itself is a comedy show right now. Just imagine. Just imagine. If this is called. Have you watched the Mongolian video? The Mongolian baritone. So they can speak the lowest. If you look at, so as musicians, what we do, right? We essentially test what scale we can go. So the lowest we can hit and the highest we can hit. The lowest is like, all right, this is very very low, this is very low, this is like baritone level low, and high, you can go high. So this is, today I'm at my lowest best when it comes to music. Man, what a shit show. Delhi's air needs to. There's it's showing signs, man. It's like literally hurting people, right? It's so unbelievable, whatever is happening. So EVs are likely to power 25% of Mahindra and Mahindra's SUV sales by 2028. EVs, they were looking at 5,000 units a month, and now they're scaling up their production to 7,000 units a month. EVs at the moment are at 4.4% of the total sales of the cars in India. That number could rise to about 6% to 7%. And if EV is likely to account for SUVs 25% for Mahindra, Mahindra is amongst the top players when it comes to SUVs, and 66% of all cars which are sold in India are SUVs. So 25% of a market leader selling EVs. So he's essentially projecting about 1 or 2% of the total market himself. I mean, the Mahindra guys. That's awesome. That's awesome, right? Bangladesh has brought tears to onion exporters. You know how? So Bangladesh has essentially apparently stopped importing Indian onions, and because Indian onions are not going to Bangladesh anymore, it's causing a real problem for the exporters because apparently Bangladesh was a very big market for Indian onions, right? So I'll tell you the market share. Bangladesh once accounted for nearly a third of Indian shipments, onion shipments. That is 33%. And now it's gone down to nothing because they're looking at Pakistan and other places and so on and so forth. And that's actually causing trouble to India. So Bangladesh is literally using economic means to fight India. How interesting is that? Mr. Ayush Jindal says, but people still prefer petrol vehicles over electric vehicles. Are you talking about pollution? Well, vehicles are not the reason for pollution, right? Vehicles are not the reason for pollution. Not sure why Maruti stock done so well from 2 months. Why are you so surprised, Mr. Sumanth Kumar? Uh, I mean, Maruti Suzuki was supposed to do well, right? We talked about how the entry level cars are essentially started to sell. They've started selling Marutis. Numbers have breached all-time highs. Essentially, they are running capacity expansion as far as their retail network is considered. A lot of good news when it comes to Maruti Suzuki. So you should not be surprised at all when it comes to Maruti, right? They are doing well, and they were supposed to do well. A 67% share is premium SUVs. No, not premium. SUVs in general. Just SUVs. Premium vehicles don't sell as much in India, right? So that's Noida Airport to draw office supplies. That's awesome. That's awesome. So, folks, I think I'll have to take a leave now. I can't speak. It's becoming very difficult for me to speak. But there are a few things that we could have covered, right? We missed a few things, but not a lot, just a few. Uh, but I hope it's not too much of an issue because I am really having trouble speaking. I wonder what I'll do when it comes to the office today, right? So there is some happening here and there, but I mostly covered it all. We mostly covered it all. In fact, we've actually covered it all. So don't worry, you're pretty cool. It's just that ASML is looking at setting up a support office in Gift City. This is, of course, in relation to the Indian semiconductor mission and rest everything. Car trade, car dekho, we're looking at merging. That's not happening, and so on and so forth. So it's pretty much done, right? Smartphone EMIs are defaulting, which we've talked about. So a lot of these stories are developing, so we won't be able to go in depth of them today. I'll have to take my leave, folks. I should thank Mr. Harish Reddy, Mr. Abhishek Sharma, Mr. William Davis, Mr. Sumanth Kumar, Mr. Ashutosh Bhandekar, Mr. Ayush Jindal, and everybody else who joined, right? Please take care. We're going to punch in. It's 9/9. Have a beautiful day, personally and professionally. I'll see you tomorrow, same place, same time, hopefully with a better voice, right? Take care. Bye bye.